Hello, everybody. Thanks for tuning in to another one-on-one with Jerry Hall. Today's guest is Jerry Hall. Bita Ave is going to interview me. I've got a lot of requests over my process, over this, over that, over the other thing. And I thought, you know what? Why not turn it over to a newer folks, right? Bita's been in the game a year and a half or so. She's really a learner. I said, Bita, come up with a list of questions and we'll walk through my process and how I've done what I've done. And if it can add some value to some new folks, right on. And even maybe some people that have been here for a while, they may catch a little nuance here and there. It's all about sharing in hopes that we all can benefit from this incredible opportunity that's being provided. So stay tuned because here's that conversation.
Well, thank you for having me today, Jerry. I am very excited to actually do this interview because we've had many conversations about these topics, about investing, how you got started, and how your process works. And I think how you do portfolio, how to actually build a portfolio building, which is a wonderful topic to have because a lot of us are very curious and actually want to know if you have a repeatable process that we can adjust to what we need as new investors. So I'm looking very forward to this. So let's just to get started, introduce yourself for those that don't know you, and also just to kind of give us a start of how you got started, like from the beginning.
Okay. Well, I mean, obviously, if they're tuning into this channel, they knew who I am. I'm Jerry Hall. And funny story, my first investing experience was at 12 years old. I had made a lot of money doing yard work one particular summer, and my mother suggested that I invest some of that money. I took a big chunk of it, and she walked with me to the Bank of America, where inside they had a representative from Charles Schwab sitting at a desk. We sat down maybe about half an hour, explained that I wanted to start my investment account, which we did. I bought $200 worth of PG&E, which is a electrical utility provider in California, and initiated what they call a dividend reinvestment program. The PG&E stock paid a little dividend at the time. So every quarter when the stock issued its dividend, it would go to buying more stock for me. And this gentleman rapped out some math and showed me this thing about compounding interest. And I remember at 12 years old thinking, and I don't remember the exact sum he gave me, that he said after 30 years, this is what it'd be. But I remember it stuck in my brain that I had an investment that would take care of me when I got older. I remember that, and I carried that with me for a long time. I didn't dabble in investing after that, not in the traditional sense anyway. And fast forward to when I actually got back into the mix, it was 2016. I had this thing in the back of my mind that there was a retirement account at Schwab for me. And the house that I had purchased my mother, I figured after she passed, I would just sell because I wasn't interested in being in New Mexico. And 2016, my mother fell ill and I went to New Mexico to, try to nurse her back to health, and she passed. And so doing my homework and, investigating these things, I found out that the house had a reverse mortgage and there was no equity in it. Matter of fact, there was more owed on the reverse mortgage than the house was worth. So that kind of sucked. And then investigating with Charles Schwab, come to find out that because I had moved so often and never stayed in touch with them, that 20 years earlier, they had actually given my property, these PG&E stocks, to the state of California. So I was really despondent, right? I was a little bummed out. I had very little capital. I'm just about to turn 50 years old. And I was like, wait a second, I'm going to need to do something. So I called a buddy of mine and he started to kind of give me a rough idea about the stock market and to look at growth industries and to look at things that, what is going to be here. And so at that particular time in 2016, my first investments were in some oil and a couple of oil companies, because I figured, gas cars weren't going away anytime soon. It would take a while before electric cars took over. And that I discovered that they had just started in Canada having legal cannabis companies. And I thought to myself, well, I remember growing up, cannabis is a big deal. Even though I personally don't use it anymore, that doesn't mean the world doesn't. And so I thought this would be a great investment. And so I put, some money in these cannabis stocks. Lo and behold, the cannabis industry really started blowing up at the end of 2016. And to make a long story short, I rode that investment through 2017 and it doubled, right? I put in $23,000. It had doubled up to $55,000 or so. The same friend who gave me the investment advice about oil and things of that nature said it's a good idea, if you don't have any money, to take some profits off the table. So what I did is I took all my $23,000 original investment out of the cannabis industry and left the rest in there, and it was doing really well. And I used that money to come down to Costa Rica and get some dental work done. And I got my eye surgery done that I wanted, the LASIK surgery. And that visit to Costa Rica in, what was it, the very end of December 2017, and I stayed through the first couple of weeks of 2018, is when I discovered crypto from a waiter at the place that I was staying. And because I was really into investing and really studying and trying to learn and understand the world of finance, I thought to myself, when I was reading about Ripple and XRP, I thought to myself, this is exactly what the world needs. I had a previous experience dealing with large sums of money, going through wire transfers to get hardwood from Ecuador. And I remember what a pain that was. And reading about this new technology where, a buyer could transfer value to a seller in the matter of seconds and have finality, to me, that was like, that makes a lot of sense. This is going to be a winner. And so when I got back in late January of 2018, I did a little bit more research, and I found an online exchange called Uphold that was selling XRP. And I started slowly taking money out of the regular legacy market and putting it into these digital assets, right? And I'd say it was primarily XRP. I mean, I think I had just a little tiny money in Stellar at that particular time. And over the course of the next 5 months, I was literally completely out of the equity market and 100% into crypto.
Oh, okay.
And that was also followed up by me moving to Costa Rica in August, because this master plan that I had, I knew I didn't have very much capital, and I knew to live in Northern California requires, a substantial monthly expenditure for rent and my car and car insurance and gas and just living expenses. And so I found a place in Costa Rica that would let me exchange my labor for my time. And I figured I would just do that until the crypto market exploded. And that was and I would just study along the way, and that would be my thing. So that was the beginning. Moving down to Costa Rica, really kind of adjusting my expenditures because I didn't really have an income, and because I wanted maximum benefit for the amount of capital that I had to put in. Basically, my crypto investment was $50,000 when it was all said and done. And so to build wealth with $50,000, if you have a monthly expenditure that would have to eat into that, that would be, to me, problematic. So I was willing to adjust my lifestyle to meet my budget, so to speak, if that makes any sense.
Yeah. Yeah. So what were the challenges that you had in the beginning, like coming from the legacy market, from the financial to switching over to the crypto world?
I think the biggest challenges were trying to understand finance, understand capital markets, understand the interwoven, the connectivity of everything. For somebody who thought I understood money before I started before I actually got into crypto and really started studying, it was amazing how much I didn't know. Like I didn't know how a yield curve worked. I didn't know how markets in Asia could affect the markets in the United States. I had a very, very rudimentary understanding of the capital market structure, period. And so the biggest challenges were going from thinking I had a understanding of the world to a realization that I had no idea really how finance worked. And so that was a huge challenge, because what it meant was that I had to now, even though I was 100% invested in crypto, I had to learn about bonds. I had to learn about the commodities market. I had to learn about the Forex market. I had to learn about these other capital markets, because everything is interconnected.
Yeah. And what tools did you have available at the time? Like what resources did you have? Like how did you start? Like technically, where did you get started?
That's a great point, or a great question. When I was kind of getting into the cannabis space, doing Google searches was where it all started. Everything starts with a Google search, right? And through Google searches, as I was looking into these companies like Aurora Cannabis, et cetera, like that, in the Google search, in the list of things that would come up, I'd find these YouTube channels, and there were some people that were, putting YouTube content up. So it was a very natural transition when I got into crypto to do the same thing. Look for people who have been studying this longer than I have and try to gain some insight from them.
Okay.
And so YouTube was a huge tool. Google and then YouTube. But it also led to Real Vision.
Okay.
Real Vision has a tremendous amount of financial content on YouTube.
Yeah, they do have a wonderful content. What was your learning process like? So you went from Googling it and then finding YouTubers that, like, what was your process like to figure out like what's beneficial and which ones are, oh yeah, this content is not going to work for me? Like, because you have to be able to evaluate the content you put, like you take in, like which one is quality and which one is, what was your, like that learning process of figuring out and weeding things out like that?
Sure. So YouTubers led me to Twitter.
Okay.
Twitter led me to more YouTubers. More YouTubers led me to other things, and the truth of the matter is that my process was probably not unlike anybody else's process. It was nothing unique or special about my process. It was check something out. If it contained a nugget that led me somewhere else, wonderful. If it didn't, it didn't. And I will tell you that in the beginning, the type of YouTube channels that I gravitated to are not the kind of YouTube channels that I gravitate to today. I'll just say that. And so I would say my research process was a lot of trial and error. But there have been some absolute gems, right? Absolute gems. Like for instance, there's a YouTuber, she Crypto Eddie is how you say her name. She's out of Tokyo, Japan, a wonderful, wonderful researcher and a real open person. So when I started this YouTube channel and I was diving deeper and deep, just really wanting to research more, I had her on my show, and there's a video on my channel where Crypto Eddie just basically defines her research strategy. And so it was just, a process of finding people that resonated with me and whose information was backed up in other places.
Yeah, that I actually did watch that video. That was very, very helpful. And that's how I found like to go and find more of the videos she did about how she does research and stuff like that. That was really helpful. And then as far as like when we talk about like now that let's start to get into like how you built your portfolio and how you now that we know your process, like let's talk about like what type of assets were you looking for? What were you looking for? And like, how were you determining like what you were going to pick and like when you're going to buy, when you're going to sell, or like, what was that process like with your,
Well, okay. So when I had capital to invest, right, when I was taking stocks from my Charles Schwab account, turning them into dollars, taking the dollars and going to places like Coinbase and Uphold to turn them into crypto, the process was back in 2018, it was really simple. It was XRP, like every dollar into XRP, literally. I mean, 90 to 95 cents of every dollar into XRP. And I'll never forget this. So December of 2018 rolls around. I had discovered Nexo. And at this particular time, Nexo was only offering collateralized loans. There was no interest or lending part of the equation. It was you could move your assets to Nexo and you could take a loan using your crypto as collateral. That was it. And I remember reading about this and thinking to myself, for somebody who doesn't have any money and doesn't have any income, there may be something to taking a loan. There may be some value in this for me to take a loan against my crypto if I believe a certain number of things are true. If I believe that the asset that I would acquire with the loan will appreciate at a greater rate than the interest that I'm being charged on the loan, then it's a win situation for me. Then I had to look at the downsides. The downsides are if the market, if the asset doesn't appreciate, matter of fact, if the asset depreciates, if the price goes down and they have to sell some of my collateral to cover the loan, that would be a negative. So I had to through just taking notepads and calculators, work through a whole bunch of different sequences of numbers to come up with a formula that I felt was fair. The formula being the amount of the loan that I took relative to the amount of collateral that I put up, right? So for instance, Nexo will let you, if you put $1, they will let you borrow 50 cents. If you collateralize $1, they will let you borrow up to 50 cents. But I was doing a bunch of math, and keep in mind, this is at the end of 2018. So the market had only been going down since I got into it. I got into it in February 1st of 2018, and it just went down. It just kept going down. Every once in a while, there'll be little blips up, but for the most part, it was just down, 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 down. And we got to December of 2018, and I found this Nexo, and I thought to myself, this could be my opportunity if I do this right.
Okay.
Borrow some money, because the market had been so beat up for the whole year of 2018 that maybe I could do something. And so I did the math, and I came up with a formula. I came up with the formula of 20 cents on every dollar. So if I had, for instance, at this particular point, I had about $24,000 worth of XRP value sitting on Nexo. And so I could take 20% of that.
Okay.
All right. 20% of that. So I took my little over 4,000, I took a $4,000+ loan, and I bought Bitcoin
Oh, okay.
and Ethereum. And I did that thinking to myself, most of the news that I hear, right? Most of the mainstream news, when anytime you're listening to CNBC or Fox or any of those things, when they're talking about digital assets or crypto, they're talking about Bitcoin and they're
Yes.
talking about Ethereum. So I took my little $4,000+ and I bought, and Bitcoin's price was like $3,500 at that time, at this particular time. And so I made that little investment and I put those assets on the platform, gave me a little cushion with my percentage. And then I went about my business and the market stayed down.
Okay.
The market stayed, 2019 was horrible.
Oh, I remember. That's when I got
in. And I remember I'm sitting here thinking to myself, this is horrible. In almost all of 2019, all that happened were tiny little blips up and tiny little blips down, and sometimes 2 blips down, but only 1 little blip up. So it was like 3 steps down, 2 steps up, 3 steps down, 2 steps up. And I'm thinking to myself, man, is this ever going to change? But I was so committed, you know what I mean? I was so committed to this particular process, and I had a loan against crypto, and you know what I mean? And so I was like double committed.
Yeah. You're in there now.
Everything I had been learning told me you can't lose if you sell. So even though your value may be down, you didn't lose any money if you didn't sell.
Right.
And all of 2018 and 2019, the news was great in that a lot of money, a lot of capital was coming into crypto, building businesses, a lot of human capital was coming into crypto. People were leaving their high-paying jobs at Goldman Sachs and JP Morgan or this tech company or that tech company and starting a crypto company or working for this or that, you know, in the crypto industry. So all the indicators were that this was a growth industry and that it would turn around eventually.
Okay, right. So this was like the beginning of your like portfolio building process?
Right. Well, that was the portfolio. See, some people come to this space and they have a job, right? And their job pays them an income. Now, there are people that have come to this space with very little capital, but that have a job and they adjust their lifestyle like I did, right? They cut their spending, they reduce their cost, and they take the difference that they would have spent for Starbucks coffee or dinners out or new shoes and things of that nature, and they stick it into crypto. That's one way to do it. You know, the way I did it out of necessity. I didn't have an income. So I had to figure out ways that I could increase my holdings because I didn't have an income. And then some wonderful stuff started to happen. Celcius came along. Nexo added a lending mechanism in their platform. And now all of a sudden, my assets could generate more assets. So it was like dollar cost averaging. When I could have my Bitcoin earn a little bit more Bitcoin and my Ethereum earn a little bit more Ethereum and my uncollateralized XRP earn a little bit more XRP, right? That would be really cool. And this all kind of started to coincide with me starting the YouTube channel that I started, right? So I started this channel about the very end of 2019 or the very beginning of 2020. And the market kind of started to turn a little bit, not so much for XRP, but for Bitcoin and Ethereum. And as the market went up, my threshold, right, because I was keeping a very solid 20% loan to value, as the asset value grew, the ability for me to borrow more came around. So as the value of my portfolio grew, I would borrow a little more money and buy some more Bitcoin and Ethereum. I'd borrow some money and buy some more Bitcoin and Ethereum. And every time I bought these assets, with the money that I borrowed, I would put them on the platform, and it would also increase my ability to borrow.
So you had to have like
that's how I built it.
Okay.
I had to have
you had like an ongoing allocation process?
Well, it was as the market allowed. So yeah, it was I did have an ongoing allocation process, but it wasn't from income. It was from the yield that I was earning on my assets. Okay. So my assets were to earn yield. That was one component to building the portfolio, right? So the assets that I held that were uncollateralized would earn more of the asset. That was step A of growing the portfolio. Step B was, as the value of the assets that I held got bigger, I could borrow more. Right. And then buy more assets. So I had asset accumulation through yield, asset accumulation through the borrowing mechanism of collateralized loans, and then I had the income that started to come from a YouTube channel. And it wasn't big, but it was something, right? And as the YouTube channel got a little bit of attention, things like iTrustCapital came along, and TaxBit came along, and of course all the referral things from exchanges came along, and some people used those affiliate links, and I would get little this and a little of that, or $10 more of Bitcoin or whatever, and all that would just go into the pot being the yield machine that would create more yield, right?
Okay. And
then you are well aware that at the end of 2019, the market started to turn around, right? The market started to turn around a little bit. It was kind of nice. It was like a little breath of fresh air. And we got into 2020 and things were going pretty good. And then COVID came and it sucked completely. But lucky for me, I had been doing all this research. I knew COVID didn't have anything to do with the technology. It had everything to do with people's behavior around spending and liquidating and doing this and margin and all those things. So in the heart of March of 2020, I borrowed a shit ton of money. I maxed it. I took a max risk play and borrowed the biggest chunk of money that I could borrow and bought Bitcoin, Ethereum, Cardano at 3 cents.
Wow.
I took a stab at some assets.
Wow.
VChain at 0.007 and XDC at 0.0005 and things like that. And then we started to come out of COVID, and what happened at the end of 2020? It was an explosion, right? Yeah, and I'll tell you, go ahead, ask your question, because there's one last step of the portfolio construction process that happened, but go ahead.
Okay, and I just want you to touch on the acquisition process as well while you're talking about it for your portfolio allocation and also the acquisition process that you have. So,
well, it became very clear to me in 2020 as I began to really look at smart contracts and smart contract platforms that the world of interaction as it pertains to buyers and sellers was going to get so much more complex than Bita sells a bottle of shampoo online to Jerry for $20. That it was actually, that there was a potential to have, if not everything, almost every financial interaction contractualized in a smart contract on a digital platform. Right. Everything from real estate transactions and employment contracts and regular service providing contracts. Let's say you're a landscaper and you do my lawn once a month, right? We could have a smart contract that has some Oracle system that understands when, if in fact you did do my lawn this week, upon completion of you doing my lawn, the wallet would send you X amount of value, right?
Right.
So I started building in 2020. It was like, okay, all excess dollars that come in are going to go to smart contract platforms. Now, this started to coincidentally happen at the same time the market is starting to take off and start to grow. So when coins like VeChain that I got for 0.007, right? And I was able to buy like 500,000 of them. Now they're all of a sudden 5 cents, 6 cents, 7 cents. I would sell chunks of them, get all my original investment out, plus a big chunk of profit, and buy something like, I'll buy some DOT at $3, $4. I'll buy some this. I'll buy some more Cardano. It's at 5 cents, whatever. And start really building out the smart contract platform part of my portfolio. And that happened all the way up until December of 2020, where I still, for the most part, the largest portion of my portfolio was XRP. I had like 130,000 of those boys. And when I saw a tweet on Twitter, Brad Garlinghouse said the SEC is going to sue us tomorrow. And I went, I'm just now getting profitable. I mean, I'm just now really starting. This thing is just starting to happen. This news is going to depress XRP. And I'm looking at how much I got 130,000 XRP. It's worth 85 grand. I've been poor for 2.5 years waiting for this to happen. I'm not going to be poor anymore. So I sold it all. Every one of them. Now I had this huge chunk of money, right? This huge chunk of money. And I backed up the truck. I bought Algorand, not Avalanche. What did I buy? Quant. I bought Quant. I bought Elrod. I bought a little bit of some stuff that I still have that hasn't done anything. But anyway, at the end of that whole buying spree, I was sitting on like 200,000 Cardano, 5 Bitcoin, 10 Ethereum, a bunch of DOT, a bunch of this, a bunch of that, a bunch of this, a bunch of that. And the market started heating up. And it's really, at the end of 2020, the market was roaring, and it stayed roaring all the way through the beginning of 2021. And it was a matter of this whole process, Bita, of if I was going to teach this and repeat it, obviously you can't teach timing, but you can teach if you put $1 into something and now it's all of a sudden worth $10, to take $4 out of that or $5 out of that and deploy it to a value position somewhere, whether it's solidifying or adding to an existing position you have, because that position is even more attractive today than it was yesterday, or a new position in something that shows promise, right?
Yeah,
and that's the process that I did. When something I invested in became extremely profitable, 10x, anywhere over 5x is where I really start looking at it. I would take a chunk, which was my original investment plus profit, and deploy it somewhere else. And there were times where the best buy on the table for me that particular day was Bitcoin. There was times where the best particular investment was something like Luna or Avalanche, or something I didn't even know that much about. Like the Graft. I was like, what the hell is this? I better learn about it. So that's what I did. And so far it's really worked out really well, because I'm sitting on 31 assets, and there are over, I think 9 is the number. 9 of these assets that I hold are completely free roll. In other words, not only have they given me all my original investment back, plus a bunch of profit, I'm sitting on a bag of coins And because my particular strategy, I don't invest in projects I can't earn yield on, all 31 of my assets are generating yield, which means they're generating more of themselves. And that has a compounding effect over time, even if the appreciation of the asset, if the market doesn't, raise the price, at least I'm getting more of the asset, increasing my value. So that would be the teachable, repeatable process, right?
Right.
Right.
So now, yeah, when we are talking about, portfolio construction, because we always worry about, okay, so what am I allocating my money to? What is going to be my acquisition process? So we talked about pretty much all three of the acquisition process that you have, which is like your scalping, where you're talking about, I will sell a certain, like get my original and a certain amount if it goes over a 5x or 10x, and you have that process. And then you also have your yield mechanism where you've set it up properly. And then you also have your loan to value process that you have. So those are your three ways of how you're, doing your acquisition for, and then how you're allocating them depending on, but you're still doing your research. So
Every day.
which one. All right. So now that we've talked about the different, strategies that you use to do your allocation and also your new acquisition, let's start talking about a little bit about like mindset and how important that is when you're doing investments, not just in crypto, but just investments in general. Like what percent of it, not percent, but how important is mindset and how do you go about it?
Well, mindset was okay. I'm gonna explain something, and it falls into mindset, and that is one. I had made a commitment that I was going to give this everything that I had, which meant that I would forego living in the United States, right, and all the luxuries and wonderful stuff that comes with that. I would move to a place where I didn't have a car, where I would most likely, if within my budget that I allowed, have to walk a lot, have to wear the same 7 sets of clothes, the 7 outfits that I got, that I'd have to be okay with the 10 pairs of socks that I had for as long as it took, and the pair of shoes that I had, and so that I was willing to delay gratification for as long as it took. See, I learned a long time ago, with the help of a lot of men in my life, that if I make a commitment, it's non-negotiable. The choice is gone, right?
Okay.
When I make a commitment, there is no longer the choice to do it or not do it. When I commit to something, it's a contract, and it takes all the emotion and all the choice out of it. So that part locked me into, I'm going to be here until this portfolio grows to the desired goal.
All right.
All right. So that was probably the biggest thing about the commitment and the mindset. One of the other elements that came into mindset was this saying that I got from a friend when I first got, the guy who kind of told me to get into oil and what have you. He said, hogs get fed, pigs get slaughtered. And what he was telling me is, don't get greedy, right? Don't get greedy. And it made a lot of sense to me in this really, really early stage market that there was going to be a ton of profit eventually. Don't get too greedy. And so how that helped me with things like using the loan mechanism with Nexo was, if I was able to buy something, right, that I could put on Nexo, if I bought it for $1 and it went up to $2 or $3, then take some of it and pay off the loan.
Okay.
Or pay down some of the loan. And what that process has allowed me to do was not get crushed by violent downswings in the market. Now, I did have one instance, and I've been public about it. There was one time I did get bit by the market downturn and had some XRP liquidated. And it was dumb of me because I had plenty of XRP sitting on another exchange that would have been enough buffer on Nexo to not get liquidated. But it all happened so quickly in the middle of the night that it was like lesson learned. Okay, I am going to make sure I'm always extremely over collateralized. But it's that whole, so not being greedy. Take what the market gives you. I mean, when you really look at it, the way I built my portfolio in that all of my assets pay me yield in some way, shape, or the other, whether it's through the protocol directly, like the POS, proof of stake protocols, or through exterior platforms like Celcius and Nexo, and even the exchange Bitrue to some extent. I'm always adding more assets. I don't need to get too greedy with leverage, right? So if I use it sparingly and in the right moments and take advantage of the market upturn and pay the loan off, I have more asset than I started with.
Oh,
So I might have bought a full Bitcoin with the loan, and I paid 0.5 Bitcoin back to pay the loan off after it went up, or 0.75 of the Bitcoin to pay the loan off. But, the point is I have more Bitcoin than when I started, or more of this or more of that.
How about like what were you able to do like an honest self-evaluation of like how you are like before you started investing and in your mindset, and like tell me about that process for you?
Okay. It's pretty easy. My whole life, I've been all about gratifying myself. My entire life, I would prefer to have fun today than worry about tomorrow. That was my motto.
Okay.
And lucky for me, most of my life, all of my working life anyway, I was always able to sell myself in one way, shape, or form. Like I always had a really good work ethic, right? I got my license when I was 19 and kept that license all the way till the time I left California.
Oh.
But I always had other jobs, right? So I had my little Hall Enterprises construction company from the time I was 19 till 50, worked at it all the time. And I always had side jobs. Like I spent a couple of years playing poker at night. I spent a couple of years running a gun store. I spent 5 years working for a manufacturing facility that let me work a shift, at night. I worked for a bank for 3 years writing home loans.
I'm sure you've learned quite a lot of financial stuff from.
Well, no, I didn't. The truth, I mean, I learned how loans worked and how underwriters worked and the underwriting process and loan to value and things of that nature in the real estate game, but I didn't master it. It was a way for me to make extra money. So what I was doing is selling these mortgages. So I was more of a salesman than anything else. But the point is, I was always willing to have a side job. And most of the time, those side jobs were things that I was interested in. You know what I mean? And if I could earn some money doing it, then that was a double bonus. But yeah, I never really thought about saving, Bita. I spent literally everything I made, and I was always able to make more the next month. But I never thought about building a retirement or what a residual cash flow would look like after I stopped trading my time for money. None of those things were a thought until 2016.
Yeah, I think that's how most of us lived. I should say lived. I don't live like that anymore, but until I had my kid, I never really thought about investing, or like you just don't think about it. There's just a certain time when unless you're exposed to it since a very, very young age and you have a family that is pretty involved, it's not something that most of us are around or are aware of. So it just makes it a lot easier to just, coast with what you have until it's too late. And then, but Let's talk about, just to wrap this conversation, since we've talked about everything that we actually need in order for us to build a portfolio, which has been amazing, which is from the beginning, the tools, the resource, the type of assets, how you do your research, how you construct a portfolio, and what mindset you need to have. Let's talk about exit strategy and how that works on, like, in your case, and then also, like, let's talk about other scenarios or other ways that people have done it that you've worked with.
Sure. Well, that's it. My exit strategy, and I've had one from the beginning, has changed and morphed over time, right? As I learn more and understand more, and as more products and services come to the market that allow deviation or something different than what I originally thought, because maybe it wasn't available back then. Like, I originally thought what I would do is that my XRP portfolio would get to the point where I could cash it out. In other words, sell the XRP, pay the tax, and go in traditional fixed income products that paid a residual income, a passive income stream. Because deep down in my soul, I'm risk adverse. You know what I mean? I don't want to take a lot of risks. I would just, the goal, and this is what I'm still fighting for to this day, the goal would be to have a comfortable $10,000 to $15,000 a month income and not have to stress about the markets, not have to follow the markets and move stuff out of this wallet and convert it to this coin or do this or, trade that or whatever. I would love to just do my life and have $15,000 show up in my checking account every month. I think that would be really cool. And so my exit strategy, and I don't know about yours or anybody else's, but my exit strategy has always been geared toward what is my end goal? What is the thing I want at the end of this? For me, it was that it's a big monthly income.
Okay.
All right, that's what it was, a big monthly income. Now it has since morphed and changed a little bit, right? Like now, currently, I still want that big monthly income, but I also want a big chunk of principal or cash or wealth that I can give to my son and daughter, right?
Okay.
And so now my exit strategy thing, for me personally, right this minute, I'm looking at, okay, how do I build the dream home that I want? How do I sustain it through that passive income stream? How do I create a vehicle that will pass on whatever wealth I don't use to my son and daughter? And what it's led me to is looking into things like trusts, land trusts, family trusts, living trusts, corporations, right? Becoming a corporate structure and having all of the quote unquote wealth be in the corporate structure, not in my personal structure.
Okay.
And so it takes a bit of, you got to learn about law. You got to learn about taxes. You got to learn. I mean, it's that whole thing right back to where we started. Nothing in crypto is in isolation, right? So to learn and really understand crypto, you have to be willing to learn and understand law. Maybe it's tax law, maybe it's corporate law or structure law, for whatever's going to work for you. And lucky for us in the crypto industry, there's so many wonderful people to engage with, right? That can direct you to things to look at and understand. And then there's also just the free, what I call unbridled research, which is you just go to Google and type in advantages of a family trust, advantages of a living trust, advantages of a corporate structure for land ownership, all the way down the road until you got an idea of what you really want to just like dive into. And so right now, personally for me, I found a piece of property. I've had to liquidate some assets. Luckily for me, not very much, a little under 5% of my total portfolio will acquire this land. And, but it's like, I'm in a different country. and I don't read and speak Spanish very well. So so there's all this documentation in Spanish and there's all this, and I'm having to translate, and it's very slow. However, I think it's worth it, right? As I'm older now, but I really enjoy learning. I've made learning become fun for me because I attach a reward to learning.
Okay, which is
Right now,
wonderful.
it's not necessarily a reward that I'll realize today, but I look through, like, for instance, I'm going through this. How do I structure? Am I going to create a living will down here, or am I going to create a corporation? Da, 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 da. I've ended up, I'm going to create a corporation, and the corporation will assign assets to various trusts. That's the direction I'm going. That may not be the direction somebody else goes, but my research led me there, and the reward I'm giving myself for this research is I get to buy and build my dream home in Costa Rica. That's the reward. And I can see it. And I've picked up an architect, and even though we haven't have final design and da 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 da, I said, I went to a piece of paper and I kind of chicken scratched what I wanted. I took pictures, I sent it to him, and he sent me back actual architectural sketches, and I can see them, right? I can see what I'm working towards. That is my reward. And so I would encourage everybody, especially for those of you that are sacrificing now for something later, really visualize the dream. And if it takes getting pictures of it and drawing it and pasting it on your refrigerator or in your bedroom, on your door, whatever, have the dream.
Have the dream.
Have the dream. It's made all the crud worth it, right? It's made 2.5 years of an absolutely horrible bear market where half of the value of what I invested was in the number of my portfolio. 2.5 years. My portfolio was half of the dollars that I put into the market.
Yeah, that's heartbreaking a little bit.
Yeah, it was heartbreaking then, but the thing of it is with commitment, I didn't have a choice. There was no choice to change. You're here. You made a judgment when you got into this. Stick with it. It'll eventually turn around. You can go back and look at history, and every single large technical innovation has had a rocky road in the beginning, but if it's truly the innovation that you think it is, it will change the world, and therefore its value will eventually catch up to the prices that the market is allocating to it in any given moment. So have a dream.
Yeah, like I actually wrote that down. That is very important. So now that we've touched pretty much majority of the things that we need to touch, the last thing that I really want you to talk about is how often do you look at your portfolio and adjust it, or do you need to adjust it, or like how does that, like, now that you talk about your exit strategy, like does that also include, okay, these are things I will not change, these are the things that I change because the market changes, the technology changes, your research changes. So like where do you see yourself there as far as like the research? And
that's a really good question. So I'm in the market all the time. I'm always looking at the market. I'm always in the news. The crypto thing kind of is my life now until it isn't. And I think the statement that I can make that really, really, really rings true is for every one thing that I actually do. And what I mean by an action is I go to an exchange and I take this much of this and I turn it into this much of that. That's an action. For every action that I actually do, there might be, I do on paper, 50, 60, 70 actions, looking at it from all different ways. You're a beneficiary of knowing this because you were one of the early members of the Patreon group, but I've worked out these spreadsheets that do all the math for different forecasting and scenario stuff. So whether it's yield or the compounding or the appreciation math, all that math I can't do with a handheld calculator and a piece of paper. It's complex. But building these tools allow me to run these different models or scenarios to really ascertain what is the best move in the moment. For the most part, I don't do a lot. But there are times where I'll take, for instance, if I, just to throw it so people understand, if my portfolio generates $3,000 in yield for a month, depending upon the market, depending upon what's going on, I may take $1,000 of that yield to buy another asset. Or take the yield, take a little piece of yield from 5 things that I don't really care about. Really, you know, they're not like, oh my God, this is going to change my life. They're really good assets to have and I want them, but I'll take some of their yield and I'll buy more of this because I think it is the thing. Or I found a new thing. I discovered a new thing and I want to take a position in it. It might only be a $500 position, but if I can earn yield on it, I can take a $500 position today, have it earn yield. And when I look back at it in 5 years, it might be $50,000.
Yeah, adds up. So just to wrap up, now that you've mentioned it, so like, what is your allegiance to? Because we always talk about your allegiance to you is you have a different mindset. Let's talk about that a little bit.
Okay, so I am no different than anybody else. I love and hate all kinds of stuff, right? But what I've had to learn is to place the sanctity, right? The importance of my portfolio above my allegiance to any community. Case in point, first couple years, I was all about XRP. Now, I still love XRP as an asset. I think the technology is incredible. I even think Ripple is an extremely well put together company. But I am not so in love with the community and Ripple and the XRP asset that if I see it is going to impair my portfolio, then I'm not willing to cut bait with it. And that boils down to everything. There is nothing in my portfolio, if the right kind of news came, that I wouldn't be willing to let go of tomorrow. I mean, if the market tells me, if the market is screaming at me, this is going to get pummeled, I'm going to take action.
So stay true to the numbers.
And also listen to yourself. Listen to yourself and ask yourself the question. So I would leave this in. I put this on Twitter today. If the SEC went after the coins in your portfolio like they did XRP, what would you do? Right? People in this digital asset space need to understand that it is the view of the SEC that 99% of all the digital assets out there are securities. That's their stance. It's not going to change. So if you know that, how are you going to behave in this market? Are you going to be loyal to your coin? I'm holding diamond hands no matter what. If a case comes against your favorite token, what are you going to do?
You already know what I did. I'm still holding. Yeah. But it's not the biggest
okay, case in point, I love Cardano. I think Cardano is so well put together from a technology standpoint. I think it has one of the best leadership teams in all of crypto. I think the collective human capital that is involved in that ecosystem between the companies that are building on it and the folks that actually founded it and wrote all the peer-reviewed papers, second to none. And it's been hugely profitable for me. And I make a ton of yield on it every single 5-day period of time. If the SEC went after them tomorrow, right? The tweet came out from Charles Hoskinson tonight. The SEC is filing case against us, and there's a good chance we will no longer be available in the US markets. But don't worry, Cardanians, we will persevere. I would cut bait with that sucker so fast. You would just see a vapor trail on the sale order book of 5 different exchanges that I moved that Cardano to sell.
I believe you, because I've seen some of your moves, so I definitely believe you.
Yeah, you know, and doesn't mean you can't buy back, right? Like I sold all that XRP when it's kind of stabilized at around 22 cents. I bought a 10,000 token bag of it.
Right. Yeah, I mean, it's important, I think, that we check our emotion, because sometimes we get very attached to some of the projects, which I am still attached to certain projects that I know I need to cut because they're not doing well for my portfolio, but I'm still holding on to them in hopes that things will change. But it's like, I'm also learning that there are things that just don't need to be emotional and just need to be just,
yeah, I don't make my decisions based on price. Price isn't the thing. Price is going to change, right? We're in this evolving, growing market. Prices are going to change. It's structural stuff. If something comes into play that says it's going to be so much harder for this asset to do what it wants to do, I got to listen.
Right.
And the SEC thing is a matter of US markets. The US is the largest financial market in the world. Nothing compares to the US capital markets. You cut off access to the US capital markets, you cut off how any of these things are ever going to grow, really.
Yeah, it definitely has a huge impact on
oh my God. Market. Yeah. So anyway, I hope I answered your questions.
You did. Well, thank you so much for your time. I think this would be very helpful for me and also for a lot of people that are just in their beginning stages of their investment, not just for crypto, but just investments in general in any market. So this would be really, really helpful. So thank you.
Thank you, Bita. Ciao.
All right. Have a good one. Bye.